Live from the financial capital of the world, this is What's Hot with Shereen Bhan in New York.
Welcome back. You're watching the special edition of What's Hot, and we're coming to you live from Times Square. And guess who decided to drop by to our makeshift studio? Arvind. Thanks very much for joining us here. So the finance minister is starting a 9-day outreach in the U.S. Give us a sense of what you make of this, and do you believe that this is, in a sense, a message being sent out to try and reassure both strategic investors as well as FIIs?
I think it is probably driven by the need to update investors, both the strategic corporates and financial investors, about the opportunities that India presents from a long-term standpoint. And clearly, India has gone through a little bit of a negative tone recently in terms of investor perception. And so it'll be helpful to hear a reassertion of the government's commitment to welcoming investors and to being much more responsive to whatever issues that might be out there.
So what specifically would you like to hear from the finance minister? I mean, on the eve of his arrival, the government has now set up 2 new committees to look at the goods and services tax, one headed by the chief economic advisor to look at rates, and the other to look at legislation. They've also cleared FDI proposals worth over 6,000 crore rupees. If I were to ask you specifically, what is it that you would like to hear from him?
We would like to hear from him, some commitment towards what are the major structural challenges that they're going to handle. How quickly is some of the subsidy issues on some of the things? Oil has been taken care of by falling global prices, but things like, fertilizer, LPG, which they've made some steps on, kerosene, how urgently or how significantly are they tackling that? How is the investment in infrastructure going to be tackled? Because the government has been somewhat slower than we would have hoped in terms of the infrastructure bottlenecks being debottlenecked. How are they going to create confidence in Indian businessmen? Because Indian businesses seem to be lacking in confidence. And whether that is more specific action on land or labor or other things that make the Make in India come true. And I think the one area that I'm very puzzled by this government is this government keeps saying that India is a power surplus country. India is not going to be a power surplus country in my lifetime. Let's be clear here. India has massive, massive power shortages just because power plants are being underutilized. It's a structural problem of SEBs not being fixed and not being able to pay. So some serious attention to the power sector and some serious attention to the banking sector, where the public sector banks are capital starved and have other opportunities. So, those are 2 key underpinnings, in addition to all the legislative stuff that we talk about, that show the government willing to tackle the tough stuff, not the easy stuff.
And on both those issues, whether it's the restructuring of the discoms or it's dealing with capitalizing public sector banks, we're still waiting to hear clarity from the government on what they intend doing. We've had a bunch of meetings that have taken place. But Arvind, today we've seen Deutsche Bank revise downwards its Sensex forecast. It's not the only one. There have been a bunch of other revisions that we've seen come in. What do you make of where the markets could be headed, at least in the short term and by the end of the year?
Well, it certainly looks like the June quarter should not be as bad as the March quarter was. But let's be clear here. The March quarter was the worst quarter for corporate India in several years. So I'm not sure what GDP numbers are being smoked out of the statistical office in India, but it looked like a double dip in terms of economic performance, certainly of corporate India. So I think June may be slightly better, but I think we need to see signs. There is a cyclical recovery coming. That's taken a lot longer than would have happened. Should have normally happened. Hopefully that's coming, but unless we fix some of the fundamental problems on infrastructure, power, and particularly the banking sector, where PSUs still account for 70% of lending, I'm not sure that we can start forming any optimistic, short-term projections for the economy or the market. But I think, medium to long-term, India still has a lot of structural positives, but I think what we need, what we have not seen from the government in the first year, is tackling some of the really hard problems, and I think that's what we need to see.
But in terms of fund flows, and we've got several global factors to contend with it as well. There's the FOMC meeting, and we should know by this evening whether it's likely to be September or the end of the year. What do you make of it, and what are you expecting, at least on that one?
Well, I think the FOMC meeting, I'm expecting, given the Greece uncertainty playing out right now, to be relatively cautious to probably hint at September, but not box themselves in to September definitely being the case, because they want to watch and see, how the Greek situation plays out. And frankly, the U.S. economic data, they will continue to emphasize, will be data-driven. The data has been somewhat better in the last few weeks. So, the U.S. data by itself, if it stays on the same trajectory, September would look likely, but given the other global forces, I think they'll leave themselves wiggle room beyond September.
So what would that mean in terms of fund flows into India, for instance, and other emerging markets? Of course, we're competing now with China as far as capital is concerned, and look at the way that the Chinese markets continue to rally. You have the Greece overhang. You, of course, have the possibility of a Fed hike as early as September, or perhaps by the end of the year. What is that going to mean then as far as fund flows into India?
Well, the fund flows, the easy part of the fund flows, the big surge is behind us, but that doesn't mean that the fund flows are about to turn negative in a big way, because you keep in mind, ECB has still got a lot of QE to do, Japan continues to do QE, and China is doing some form of, money being flown into the stock market coming from easier policy. I don't know if I'd strictly describe it as QE. But so there isn't going to be a sudden sucking out of liquidity. But I think the best environment for India has been in the last 12 months.
Yeah.
Oil prices are going to go higher from here, not lower. We're firm believers in that, watching oil closely, that oil is headed higher over the next 12 months. So the easy stuff is behind us. The monsoons have started off well, but that's a real question in terms of the El Nino early reports. It could be challenging. So I think that the headwinds are going to be on several fronts, but they're not massive headwinds. They are less benign than they were in the last 12 months, so the government is going to have to work harder.
Okay. What looks good to you at this point in time, Arvind? What is it that you would back, both in terms of specifics or sectors?
I think the consumer sector in India looks interesting. The corporate sector looks a lot less willing to put its foot in front in terms of corporate capex. But the consumer sector, particularly consumers driven by more urban consumption, looks promising. And I would say, in addition to that, India remains a bottom-up market of select companies across the sectors. Some of the NBFCs, one of the areas that has done very well through the whole slowdown and continues to do well is the housing finance sector. But we think things like autos and four-wheelers are starting to see a recovery in demand that was, that has been pent up for 4 years.
Right.
So that should come. I think roads is probably one of the earliest areas where we are seeing signs that NHAI and the minister might be getting back into sync. And if that happens, then you could see improvement in
capital goods, because at least the IIP data suggests that capital goods is seeing a significant rebound.
I think that could be an area of interest. We haven't got any specific names in that area, but I think capital goods, the disappointment has been that the IT sector has seen a slowdown in its growth, and that I think is not because necessarily international growth is slowing down, but there might be some structural challenges and changes going on in the IT industry on a global basis. So that's been an area. And then the banks, other than a few high-quality private sector banks, the public sector banks, we still need to solve their capital needs. Only when their capital needs are solved, we would be interested in seeing that as an area of interest.
So you continue to be bullish about India in the long term, but in the short term, cautiously optimistic?
In the short term, cautiously optimistic, and really questioning the government on what are they going to do to jumpstart things, and that's why I think the finance minister's trip was very timely. Hopefully it'll answer the tough questions.
Absolutely, and we will put those questions to him. Arvind, it's been a pleasure. Thanks very much for joining us here at Times Square in our CNBC TV 18 makeshift studio and taking us through your assessment of the markets and, of course, this visit that the finance minister is here in the US.
Well, thank you for having me.
Thank you very much.
Okay.
Well, on that note, it is time for us to wrap up this special edition of What's Hot, but don't go anywhere. We're back in 30 minutes and we continue our conversation on India Business Hour. Stay tuned to CNBC TV 18.